Welcome to Explain the Charts. Today, October 7th, 2024, we're diving into the AUDUSD, the Australian dollar against the US dollar, examining both current events and the technical data. The Aussie has been under pressure in recent days, largely due to the strengthening US dollar and concerns about global economic growth. With the Federal Reserve's interest rate decisions and upcoming inflation data also impacting the AUDUSD exchange rate, we'll be looking at the 1-day, 1-hour, and 15-minute charts to identify key trends, potential reversals, and support and resistance levels that might offer insights into where this currency pair could be headed. So buckle up, grab your coffee, and let's get into the charts. First, let's take a look at the big picture with the daily chart. Looking at the AUDUSD on the daily chart, we see a distinct downtrend from the recent high, with the pair falling below several key support levels. This suggests that sellers are currently in control of the market and further downside potential is possible. The 0.6823 level served as strong resistance in the past and now appears to be acting as a potential psychological barrier for buyers. If the price breaks below the previous swing low of 0.64319, it could confirm a continuation of the downtrend and open the door to a further decline towards 0.63085. However, it's important to remember that the market is dynamic and trends can change quickly. Let's switch to the 1-hour chart to see what's happening on a shorter time frame. Zooming into the 1-hour chart, we can see a bit more granular detail of the recent price action. The AUDUSD has been trading in a clear downward channel, bouncing between support and resistance levels. However, the recent candle has seen a slight upward move, which might be a sign of bullish pressure emerging. This bounce might be a temporary reversal or a false breakout, and it's too early to tell. We need to watch closely how the next few candles form to determine if this upward move is sustainable. Let's narrow down our focus to the last 24 hours on the 1-hour chart to get a better picture of the immediate trend. In the last 24 hours, the AUDUSD has fallen below a key support level, signaling potential further bearish momentum. The price has failed to reclaim the 0.6750 level, indicating that sellers are still in control. However, the emergence of a bullish engulfing pattern at the bottom of the chart raises some cautious optimism. Let's take a look at the 15-minute chart to see if we can spot any more immediate signals that could help us make a decision. The 15-minute chart is giving us a clear picture of the current price action. We see that the AUDUSD has been in a tight trading range for the last few hours, bouncing between 0.6750 and 0.6760. This consolidation could be a sign that the market is indecisive. While the recent candle shows a slight upward move, we need to watch for a breakout of this range to confirm any potential direction. A break above 0.6760 could indicate a short-term bullish trend, while a break below 0.6750 could signal further downside pressure. The recent rise in oil prices, driven by the Israel-Iran conflict, is creating a risk-off environment. This is putting pressure on risk-perceived currencies like the Australian dollar. The upcoming U.S. non-farm payrolls (NFP) data release is expected to influence market expectations for the Federal Reserve's (Fed) monetary policy actions. The NFP data is expected to influence market expectations for the Fed's monetary policy actions in the remaining 2 meetings of the year. The AUDUSD movements will also be influenced by the U.S. presidential election in 2024, as it could impact USD price dynamics and the Aussie's trajectory. To recap the key price levels to watch for in the AUDUSD. On the daily chart, the 0.6823 level remains a significant resistance level. A break above this level could signal a change in the overall trend and trigger a potential rally towards 0.7096 or even 0.7179. However, the 0.64319 level is a crucial support level. A break below this level could confirm the continuation of the downtrend and lead to a further decline towards 0.63085. On the 1-hour chart, the 0.6750 level is currently acting as a significant resistance level. A break above this level could signal a short-term bullish trend, but a failure to do so could indicate continued bearish momentum. On the 15-minute chart, The 0.6750 and 0.6760 levels are defining a tight trading range. A break above 0.6760 could indicate a short-term bullish trend, while a break below 0.6750 could signal further downside pressure. Keep an eye on these levels and be prepared to adjust your trading strategy based on the price action.